So the Westpac Melbourne Institute Consumer Sentiment Survey has just been released for the month of March. The survey was in the field over the week ending March 9, the week when the Trump tariff war went live and global share markets started to sell off heavily, and clearly there was a risk going into the survey that those developments would overshadow other positives, the last month of course being the start of the RBA's easing cycle and some further improvement around cost of living. The final result was actually relatively positive given that lead, and sentiment in the month rose 4%. The index going to 95.9. Recall that 100 is the neutral level where pessimists and optimists in Zen balance. We're only about 4% from that level now. May not see that level anytime soon, but certainly the signs are more positive that there's a recovery gaining traction. Where those overseas developments are playing through quite clearly is around expectations for the economy. We did see an improvement in the month, but we're still off the highs we got to for those components of the index back in November when the US presidential election was held. We're also seeing clear signals around consumer responses around news recall and news heard. 15% of consumers recalled international news that was overwhelmingly negative, 80% saying that it was unfavourable news in general, while the news on the domestic front was less unfavourable than it was 3 months ago. Elsewhere in the survey results, we saw a clear improvement in expectations for the labour market, quite a promising development, all things considered. Unemployment expectations are one of those factors that can have a heavy bearing on consumer decisions, whether it be spending or major financial decisions. They're now relatively positive on the outlook for the labour market. In fact, taken at face value, consumers see the soft landing for the economy as having happened. They're not expecting unemployment to be an issue going forward. Where the improvement in sentiment more generally is happening, though, is around family finances. We're seeing a stabilisation in finances compared to a year ago, a steady improvement in assessments of whether now is a good time to buy a major household item, up nearly 7% in the month and well above the lows we saw last year. Those cost of living issues receding. And consumers are outright positive about the year ahead in terms of their own finances. They're expecting more rate cuts to deliver some further improvement over the next 12 months. That's been led by the mortgage belt in particular, who are particularly receptive to those interest rate easings. So overall, quite a positive read around the Australian consumer. We're still in slight pessimistic territory, but we've come well ahead from where we were a year ago, and it's consistent with a gradual improvement, a gradual recovery for the consumer heading into 2025.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published or reproduced in whole or in part without the prior written permission of Westpac.